UPS announced Tuesday it will lay off 12,000 employees. That's about 2% of its workforce, according to figures from the Wall Street Journal. The Journal reports most of the layoffs will affect individuals in contract and management roles. UPS joins several high-profile companies that have recently announced layoffs, among them Xerox, Wayfair, and Amazon.
The global job market is experiencing a dramatic shift in 2025. A growing number of corporations across industries are announcing mass layoffs, citing a combination of economic pressure, automation, and restructuring priorities. Companies like Meta, UPS, and Morgan Stanley are leading this trend, letting go of thousands of workers in what many analysts are calling a recalibration of the workforce. These moves reflect more than just cost-cutting. They reveal deep changes in how companies are preparing for the future.
Well, John, I think the main thing to remember to start with is the U.S. economy is really big. The flows are enormous. 2023 was the year with the third lowest layoffs on record, and we still had 1.5 million layoffs a month, almost 20 million for the whole year. So within that context, these numbers alone are high profile, but they're small. And I think the question, which we haven't seen it materialize, is whether these sort of drip of high profile layoffs start adding up to a bigger wave of layoffs, but we don't see it yet.
And when the Federal Reserve started raising interest rates to slow economic activity, was the expectation that by now, a good while after that rate rising period began, that expectation would be where it is, or is it lower than people expected? Because there was some expectation it would go up as the economy cooled, right?
Yeah, I think we've been amazingly lucky that inflation's come down. It's basically in recent months where the Fed wants it in the long run. And at the same time, the impact on the unemployment rate has been very small to nearly negligible. Now, the risk is that we're sort of near a tipping point, and we haven't seen it yet, but in early this year, maybe it starts creeping up. But I'm really crossing my fingers that we get lucky, and instead of it being just a small positive impact on unemployment, we don't see any at all. Let's cross our fingers. That'd be amazing.
Let me ask you about these policies of having people come back to in-person work. Is kind of a point of friction that I think tells us something about the labor market. You tell me, because when employees are hard to find, employers say, sure, work from home, do what you need, I want to keep you. But when jobs are hard to find, employees say, okay, I'll show up all day long because I may not be able to get another job or go somewhere else. Do you see these companies that are saying you got to come in and work full time as illustrative of anything in particular that's happening in the labor market?
I think you're absolutely right. I think that if you think about it, this working from home, remote, hybrid work was this benefit that's highly desired by employees that became prevalent during the pandemic and stuck around afterwards. Employers and bosses seem more reluctant to hand it out, but it's part of this bargaining that's going on between workers and employers. And as the labor market's cooled somewhat, with hiring coming down, employers are becoming less generous offering that. And so employees are finding that it's harder for them to keep hold of that benefit. And employers, do have leverage to bring people back.
So as we look ahead through this year, what trends are you looking at? What in terms of the employment market, the labor market, what are you looking for to tell us how it might be faring?
Well, on the optimistic side, we've seen hiring come down a lot. It's been fortunate we've seen it through the lens of hiring coming down, not layoffs picking up. But this is not a great time to be looking for a job. And hopefully we see that stop. That, to me, will be a very good sign that, in some sense, employers have right-sized their workforces, and we can start being really optimistic about the labor market and not just kind of holding on to our seats. And then on the flip side, I think if we start seeing that the layoffs are so far just mostly headlines and relatively small numbers, start moving the meter on aggregate layoffs, that will make me a little more worried that policymakers are falling behind the curve in terms of loosening the pressure they're putting on the labor market.
Meta, the parent company of Facebook, Instagram, and WhatsApp, has continued its workforce reductions well into 2025. After slashing over 20,000 jobs during 2022 and 2023, the company has resumed layoffs this year, targeting departments like Reality Labs, AI development, and marketing. Even though Meta's revenues are up, CEO Mark Zuckerberg has emphasized the need to do more with less, signaling a leaner approach to innovation. With a growing focus on generative AI and immersive digital environments, Meta is reorganizing around fewer but more specialized roles, particularly in high-growth segments like automation and infrastructure.
We begin tonight with our big story. Cutbacks in big tech now making their way to Arizona.
Just within the past several weeks, several major companies have announced massive layoffs. Microsoft announced 10,000 layoffs on January 18th. The very same day, Amazon started laying off more than 18,000 workers. And yesterday, PayPal announced that it would lay off roughly 7% of its staff. Well, now we're getting new details about cuts within Intel here in Arizona. Good evening, everyone. Thanks for joining us for 12 News at 6. I'm Mark Curtis.
And I'm Kadiva Devine. Intel hasn't announced any specifics about job cuts, but 12 News is learning some of the details about pay reductions.
Team 12's Bram Resnick joins us now to break down what we know so far. Bram?
Yeah, Intel isn't just a tech giant. It's been a driver of the East Valley economy for decades. Right now, the motor is sputtering. The company's weathering its worst stretch in decades. And by March 1st, thousands of Intel employees will absorb across-the-board pay cuts.
And the first class of this program is going to be all women.
Visiting Intel's Chandler campus a year ago, First Lady Jill Biden gave her blessing to a new program creating the workforce of tomorrow. How quickly things change. Intel's workforce of today is taking some big hits. One of Arizona's largest employers, with 12,000 people in the East Valley, is cutting paychecks after sales of computer chips tanked in the fall. Sales projections for the winter are even worse. Most employees will absorb 5% pay cuts. Many of these workers are engineers who earn more than $100,000 a year. Merit raises are canceled, and the 401k match for employees will be cut in half, from 5% to 2.5%. Chief Executive Officer Pat Gelsinger will see his base pay cut by 25%, but almost all of Gelsinger's $179 million in compensation comes from stock awards and options. Hourly workers and junior employees won't be affected. Intel has laid off workers in Arizona, but won't say how many. In a semiconductor industry that's notorious for its ups and downs, this down could last a while. Intel's Gelsinger says the company's projecting its worst losses in 30 years. And you'll recall Arizona's semiconductor industry got a big boost last year with Congress's passage of the so-called CHIPS Act. The goal, building more semiconductor plants in the U.S. Analysts say Intel won the largest share of the $39 billion in incentives to build new plants. Unclear whether those will be coming out of the ground.
UPS has confirmed it will cut approximately 12,000 jobs globally. With fewer packages being shipped compared to the pandemic boom, and with labor costs rising, the company is automating many logistics and delivery functions. AI systems now optimize delivery routes, and robots handle increasing portions of warehouse operations. These efficiency gains come at a human cost. Many warehouse staff, drivers, and mid-tier managers have found themselves without work, with some hubs seeing as much as 30% workforce reduction. UPS says this is necessary to stay competitive, but unions and workers have pushed back, calling for more protections and retraining opportunities. In the financial sector, Morgan Stanley has announced thousands of layoffs in its wealth management, technology, and support teams. This is part of a broader shift in the banking industry, where firms are relying more on AI tools for risk analysis, client profiling, and portfolio management. Other financial giants like Goldman Sachs and Barclays are also reducing headcount. The message is clear. Technology is replacing humans even in roles that once required years of training and high levels of expertise. The rise of automation and AI is one of the main forces driving these job cuts. In nearly every industry, tasks that were once performed by people, data entry, customer service, logistics planning, legal document review, are now being handled by intelligent systems. Businesses argue that AI increases productivity, reduces error, and lowers costs. But for employees, it means facing a future where job security is no longer tied to experience or tenure, but to adaptability and technical literacy. At the same time, workers are being asked to reskill faster than ever, Fields like data science, cybersecurity, and AI system management are booming. But the barrier to entry remains high. Many of those laid off don't have the time, money, or support to transition into these fields. This is deepening the divide between high-skilled professionals in the digital economy and the growing pool of under- or unemployed workers left behind. Governments and institutions are now under pressure to respond. There's growing demand for expanded retraining programs, universal basic income proposals, and stronger worker protections. But policy often lags behind technology, and in many regions, displaced workers are left without clear pathways forward. The result is a workforce that feels increasingly uncertain about its place in the economy. Meanwhile, corporate leaders insist these moves are necessary to remain agile and future-ready. They argue that automation allows companies to weather economic instability, inflation, and global supply chain disruptions. Yet critics argue that many companies are prioritizing profits and shareholder value over social responsibility. With growing income inequality, rising mental health concerns, and increased public dissatisfaction, the social consequences of mass layoffs are becoming harder to ignore. The layoffs of 2025 are not just a temporary economic response. They are a signal of deeper structural change. We're entering a new phase of the digital economy, where jobs are redefined, industries are reshaped, and the meaning of work itself is being questioned. How companies, governments, and workers respond to this moment will shape the global labor landscape for years to come.